Ladies and gentlemen, good day and welcome to the Satia Industries Limited Q1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Ms. Runjhun Jain from EY. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. On behalf of Satia Industries Limited, I welcome all of you to the company's Q1 FY2024 earnings conference call. I am Runjhun Jain from EY IR Practice, and we manage the investor relations of Satia Industries Limited. We hope you would have got the chance to review the results which are available on exchanges and on company's website as well. To discuss the company's business performance in the quarter gone by, we have with us Mr. R.K. Bhandari, Joint Managing Director, Mr. Chirag Satia, Executive Director, and Mr. Rachit Nagpal, Chief Financial Officer of the company. Before we proceed with the call, a disclaimer. Please do note that anything said on this call during the interaction in and out collaterals will reflect the outlook towards the future or which should be constructed as a certain forward-looking statement must be viewed in conjunction with the risks the company faces and may not be updated from time to time. More details are provided at the end of the investor presentations and other filings that can be found on company's website www.satiagroup.com. Should you have any queries or need any further information at the end of this call, you can reach out to us on the email addresses mentioned in the company's collateral. With that, I would now like to hand over the call to Mr. Rachit Nagpal. Thank you, and over to you, sir.
Thank you, and a warm good afternoon to all. It's a pleasure to have you with us today as we share the highlights of our recently announced Q1 FY2024 financial results. We are pleased to share that we recorded robust revenue growth of 15% year-on-year to rupees 4,812 million. Our deep-rooted partnerships with state textbook boards have not only contributed to this impressive figure, but also provided with enhanced revenue visibility and pricing stability. In a noteworthy development, our gross margins experienced an upswing, climbing to 59.1% from the 47.7% reported in Q1 FY23. This positive shift can be attributed to a substantial reduction in agro and wood pulp costs, particularly evident in the decline of wheat straw pricing by 30 to 35% year-on-year. I am thrilled to share that our Q1 FY24 EBITDA margins have reached an all-time high of 31%, an outstanding achievement despite the challenging external landscape. This marks the fourth consecutive quarter of margin enhancement. The driving forces behind this remarkable performance include our efficient cost management strategies and the advantageous economies of scale we have harnessed. Our Q1 FY24 PAT stood at 841 million, marking an impressive 178% year-on-year growth. Our order book continues to remain robust. We secured orders worth 12,000 metric ton during the quarter, part of which was fulfilled in Q1 with the balance to be completed in Q2 financial year 24. These orders provide us with strategic insulation against price fluctuations. Notably, we have secured new orders from prestigious clients such as NCRT and DAV Committee, furthering enriching our clientele. An update on our capex side, our wood pulping capacity is in partial readiness. However, due to the current cost effectiveness of imported wood pulp, we are pacing our expansion plan accordingly. With our strong cash generation capabilities, we have made considerable strides in trimming our long-term debt. In addition to regular debt repayments, we proactively prepaid 347 million during Q1 financial year 24. Additionally, the board has declared an interim dividend of ₹1 per share. With the new education policy spotlighting a broader range of subjects, including arts, sports, and vocational skills, we anticipate the paper industry's growth trajectory to persist. Our writing and printing paper segment is well positioned to tap into these opportunities. Despite industry-wide realization challenges per kilogram, our unique locational advantages and vertically integrated model, alongside our enduring relationship with textbook boards, fortify our confidence in the industry. Consequently, we anticipate a 200 basis points improvement in EBITDA margins during financial year 24 over financial year 23. Thank you for joining us, and we will now move to the question-answer session. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Can you hear me?
Yeah. Good morning.
Yeah. Question, sir.
Sir, I'm so sorry to interrupt. May I please request you to use the handset mode while speaking?
Yeah. Is it better now?
Yes, sir. Thank you.
Yeah. Sir, my question is on our EBITDA margin. So, margin has improved quite well this quarter, but on full year, we're saying like 200 basis points over last year, which is lower than the current Q1. So, is there any one-off in this Q1 numbers?
Because as you must be aware that the paper prices in the last month, June and July, they went down by almost 10 to 15% in certain varieties, and prices in the next quarter and throughout the year will not remain in the same range as they were in the last year. Last year average was plus 90 rupee a kg. So this year it could be on the lower side, though definitely some compensation will be coming from the cost of production side, but definitely it will be, this quarter should be the peak EBITDA, and there should be 4 to 5% drop minimum in the EBITDA margin in the coming months here.
Got it. And sir, how are things looking on the demand side and revenue side? So are we at peak utilization, or what kind of revenue we can expect for this year?
Yeah, demand is not an issue. Only issue is that there was pressure on prices for some time, especially in the from mid-June to mid-July. But then paper prices, especially writing and printing, they started looking up again. So now almost all the mills, they have again revised their prices from the lowest level, whatever anybody had. And now the demand is also good, because once prices start moving up, people start their buying also. If prices go down, then people even stop buying their normal demand also, or they'll buy what the least they need in the moment. Yeah. The prices we are running at our full capacity. Capacity is no issue, and the market is looking up. Yeah.
Got it. Thank you and all the best.
Welcome.
Thank you. Before we take the next question, I'd like to remind participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Govind Lal Gilada, an individual investor. Please go ahead.
Good morning, sir.
Good morning.
Yeah. I want in short, can you brief us how international scenario, import, export, and raw material pricing and prices, finished product in India, you told that they have been bottomed out. So from peak, how much they are, you told 10 to 15% in June, July, and August, how much they have fallen, net from top, how much they have fallen, and as of today, how much they have from bottom again, they have recovered, and going forward, how much we are seeing recovery again. So these are the points. Thank you.
Yeah, the prices, if we talk of sale prices from 90 rupees, they have fell anywhere between 10 to 15%. And depending upon the variety, they have gone down to any level of 70,000 to 75,000 rupee a ton. But after that, the prices have again moved up by almost 5% in almost all the varieties. And there is likelihood of their further increasing once the textbook orders, they start coming in the coming month, which would be to the tune of almost more than 3 lakh ton, which will be distributed among various mills to be executed in the next 3 months. So that will further perk up the demand in the market also, local market also, and the prices too will maybe going again to the positive side. So second, international paper prices, earlier they were anywhere in the range of $825 to $850 C&F, and now almost all the mills, Chinese mill, Indonesian mills, they have announced an increase of almost $25 to $30 in the month of August itself. So internationally also prices are going up. Mills have announced their increase, and same is happening in India, both for A-grade mills and B-grade mills. As far as raw material scenario is concerned, international wood pulp prices, they had gone down to the level of almost $470, $480 per ton, which has gone up to almost $530 to $550 now. So even they have increased. Same softwood pulp has gone to almost $600. It is now in the range of almost $630 to $650, depending upon the quality to quality. And waste paper prices, they are down from their peak level to anywhere between SOP and all those grades to a level of $240 to $250 per ton C&F. So raw material prices in the indigenous agro-based mills, wheat straw prices are down a lot than the last year, almost by 25 to 30%. And chemicals, they are also down. And the rest of the things are more or less same. Yeah, that's the overall scenario. Almost 10% downside should be minimum there in the casting itself because of the reduction in prices. So this second quarter, how demand scenarios are, we will be able to sell what we produced last year, what we have sold, we will be able to sell same quantity this year also, or will produce more and inventory will be carried forward for next quarter? Yeah, as we explained in our the quarterly results also, we had orders almost of 15 to 20,000 ton in hand when we started the quarter. So in this quarter, we are likely to get orders from 2-3 textbook also, but the regular inflow of orders from open market is also there. So as far as whatever we will be producing, we will be selling, there is no issue on that.
So next I want to understand that because second quarter being a lean season, off season, so season picks up from September, all that. So whatever we have sold in first quarter, whatever it is, so same we will produce and same will be able to sell.
We have produced almost 52,000 ton in the first quarter. We may be producing more and maybe we will be selling little more.
So even being off season, the selling is not a concern for us.
No issue.
So, thank you very much, sir. I will come back in again. Thank you.
Welcome.
Thank you. Before we take the next question, I'd like to remind participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Shri Gopal Agarwal from Agman Advisors. Please go ahead.
Thank you, sir. My question is regarding the margin outlook for FY24. If you could just throw some light into it.
Margin outlook, beta margin, as we explained earlier, from 31%, it is likely to come down, but throughout the year, as we see for today, unless anything abnormal happens on the upside or downside, we should be achieving an EBITDA of 25% plus minus. And top line, if we look at the today's prices, it should be again in the almost 1,700-1,800 crore region. And bottom line, again, not almost 12% plus minus.
Also, if you could talk about your order book and how do we see it closing by end of 24?
Yeah, as I already said, we have already cleared the first quarter. That's very good number. And second quarter, we have order almost for the full quarter to be executed in this quarter. And thereafter, we are likely to get good orders from 4-5 textbook boards, which are already, the prices have been quoted, and 2 orders are expected in the month of August itself. And other orders will mature in September, so which will be total to the tune of 40 to 50,000 tons. So that those orders will be executed in the coming 4 to 5 months, and those will be price will be better than what we get from the market on average basis. Yeah. So outlook for the coming months is very good as far as Satia is concerned.
Okay, got it. Thank you so much. That was all from my side.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Deepesh Sancheti from Manya Finance. Please go ahead.
Hello.
Mr. Deepesh Sancheti, you may please go ahead with your questions.
Yeah, I wanted to know what is the debt that we have prepaid 37 crores. Okay.
Yeah, at the moment, the total term loan is almost 310 crore. And if we do not pay any more, prepay any more amount, it should be in the range of 285 crore by the end of 31st March 2024.
And what is the working capital?
Pardon?
For the working capital?
No, working capital is hardly used 20%, 25 crore fund base, and rest is non-fund base, which is mostly bank guarantees given to the various textbook boards, and that's all.
That's all. Okay. And what is the capex we are expecting to do this year?
Capex is only for this running year. Total 150 crore, which is to be capitalized. One is for the boiler, which is Rystra-based boiler, which we will come up by in the last quarter. And second is the hardwood pulping capacity, which we had put on slow pace because of the cheap prices of the imported hardwood pulp. So these are the two major capex in the current year. Yeah.
And they will be funded by existing loans or loans?
Yeah.
So we have tie-ups with UCO Bank and HDFC Bank for the same. Boiler has been financed by UCO Bank, and the hardwood pulping has been financed by HDFC Bank.
Perfect. No, I'm just asking that the term loan which is of 310 crores, will that be taking care of this expansion, or there will be fresh loans which will be taken, fresh term loans which will be taken?
No. We are telling, sir, as and as we prepay, we will also be simultaneously taking disbursements from the tie-ups. So overall outstanding position at end of the financial year will be roughly 290 to 300 crores.
Okay, that's fair enough. And just wanted to... Yeah, sorry.
It is clear that 310 is the present outstanding term loan. Disbursement in the current year will be almost 40 to 45 crore, and repayments will be 70 crore. So that's why I gave you that figure of almost 285 crore at the end of the financial year. Yeah, now please.
Perfect, sir. Yeah. Oh, okay. And in the entire year, what are the revenues from the...
Hello?
Yeah, from the... what is the revenue of the entire year of eucalyptus and carbon credits?
Carbon credits now, REC sale is almost, the government has stopped that sale. And carbon credit, you must be aware that REC is now not openly tradable. Government has put a ban that those who are captively producing REC, so they can use the credits to offset their any use of fossil fuel, and as far as the eucalyptus is approximately 10 crore revenue.
Okay. What is the cost of power per unit? Because our entire captive power is done by us only.
Yeah. It is almost 3.5 rupees a unit.
3.5 per unit. Okay. And we had, as an industrial power, I mean, if we buy it from outside?
That is 7 rupee a unit from PSPCL.
Oh, that is a significant thing. Okay, just wanted to know what is the depreciation policy, because last quarter four, we had a huge depreciation figure, and again the depreciation has come down to 32 crores. So I just wanted to know how is it going to be over the year?
Yeah, last year that was only a one-time adjustment that had been made. So that accounts for additional 80 crores in the last year. Now it is on WDB method with the 5% residual value. So it shall remain in the range of 30 to 35 crores.
What are the growth drivers? I mean, we understand that 50% of our revenues come from the textbooks and from government. The agencies. So, how is it going? How is the growth? Are we seeing any growth in that also?
Overall growth in the demand is there already in the writing printing segment. As far as we are concerned, we see that we may be doing almost 5 to 10% more volume in this year. And in the coming year, the management is making certain plans to further expand capacity by almost 100 tons per day.
Okay. What is the current capacity utilization?
It is almost 90%. Because PM4 is having a capacity of almost 300 tons on certain basis weight of paper that we produce. So it has been making almost 200 tons on average basis in the last year. So there is a lot of potential on that PM4. So this year, that's why I said we may be achieving almost 10% plus minus growth in that volume of the sales, volume of production, sorry.
So how much?
Depend on the prices, yeah.
Yeah, how much capacity increase will happen? I mean, from in terms of tonnage?
Presently, in the present utilization is 575 ton per day, and we intend to achieve it to almost 600 ton plus per day.
600 tons?
Per day.
Per day?
Yeah. So this should come anywhere around 220,000 tons.
And so is there any tonnage capacity increase we are planning with this capex?
Not this year. We may go in for, first we need to get the clearances. Once we get those, then we may go in for, as I said earlier, by another 100-ton expansion in the capacity.
100
which may mature in the financial year 24-25.
Okay. And you expect the return on equity to remain at 30% or around the 25% region?
As Manarika mentioned, that slightly there will be a fall in EBITDA margin, so that will be slightly on the lower side by 300 to 400 basis points.
Okay. No, I'm talking about the return on equity.
Yeah, so 3 to 4% it will decrease.
Okay, but in the
Mr. Sancheti, I'm sorry to interrupt, but your audio is unclear, sir. It's breaking up. Requesting you to please dial back and join the question queue.
Am I audible now?
Yes. It will remain in the range of 30% plus only.
Okay, 30% plus only. Yeah. Okay. So since we are planning so much of expansion, are we looking at infusing money into the business through preferential, as our promoter holding also is around 50-52%? Are we looking at that in the future?
Yeah, not at the moment, but anything could happen. Yeah, definitely.
Okay. Great talking to you, sir. All the very best. And if there's any questions, I will definitely come into the line. Thank you.
Welcome.
Thank you. The next question is from the line of Prashant Rishi from Cascade Capital. Please go ahead.
Hi. Sir, you mentioned that right now the wood pulping you're going slow because international hardwood prices and softwood prices are down. And so as and when they go up, it will become far more viable to have in-house wood pulping. So I just wanted to know at what level of price approximately do you think an in-house wood pulping capacity would become viable?
If hardwood pulp crosses $600 or $650 rather, at $650 it comes at par with the cost of the indigenous hardwood pulping inside the mill. So presently there is a gap of 8,000 to 10,000 rupees per ton. If we produce hardwood pulp inside, the pulp is costlier by almost 8,000 to 10,000 rupees per ton. So that's why we produce whatever minimum is required to keep the operations efficient, and rest we buy imported hardwood pulp and use that just to reduce on the cost.
Okay. And tomorrow, if say in 6 months or a year, if hardwood pulp prices were to shoot up, how long will it take for us to get the wood pulping capacity in order up and running?
That 50% project is already online. We have already done the digester displacement system that we have explained in our previous calls. That is already operational, and it is already giving economy in whatever pulping we are doing in-house for hardwood pulping. It will take just 3 to 4 months, which we are doing simultaneously. We will complete this project maximum within 3 months, next 3 months. So we are not going to wait for the hardwood pulp price to go up. That is already ongoing. The only thing that we have done is we have just slowed down that pace. Yeah.
Okay. And one last question, sir. You mentioned waste paper prices. You mentioned a lot of prices, hardwood pulp, softwood. I just missed the waste paper prices. What were the current waste paper prices and how much have they fallen?
Waste paper prices, they have come down, if we talk in rupee terms, so they have come down by almost 10 rupees. Now their SOP is almost 250 dollar C&F, which was earlier in the range of $325 to $350. So similarly, Indian waste paper, it has come down from 30 rupee plus to almost 22 to 23 rupees per kg. So waste paper prices have come down by almost 25%, 20 to 25%, depending on different grades.
Okay, and even these are, so like you mentioned, otherwise prices have moved up, like international paper prices and hardwood pulp prices. I mean, after dropping quite a bit, they're now stabilizing and moving up slightly. So is that the case with waste prices also?
No, waste paper is more or less stable now at these prices at the moment.
Okay. All right. One last request, sir. Just please release your annual report as soon as it's possible for you people, so that we can get idea.
Definitely, sir. Definitely. Thank you.
Thanks a lot. Bye-bye.
Thank you. The next question is from the line of Shrishti Tandon from NVS Brokerage. Please go ahead.
Hello, sir. Thank you for the opportunity.
Yeah.
I just wanted to understand, as now the agro pulp and the wood pulp cost has been reduced, so and the cost of chemical also has been reduced. So which are the reasons which will drive the price of the chemical, agro pulp and wood pulp, and what kind of impact can we see after the reduction?
The effect on the cost is the cost will be down by almost more than 10%. And what else you asked, please?
I'm asking which are the reasons which will drive the price of the chemical and agro pulp and wood pulp, and what kind of impact can we see after this kind of reduction?
Yeah, I told you it has come down by almost 10%. If whatever cost we had in the last quarter, in the first quarter of this year, the cost for the next quarter will be down by, variable cost will be down by almost 10%.
Okay, sir. Also, can you please share some light on what sort of volume you are expecting to do this year, given the second quarter?
Yeah, as I already said, last year we did almost 209,000 tons. So this year, anywhere between 5 to 10% increase we are expecting in the volume this year. It will be on the plus side, definitely. That's what we are trying our best.
Okay. Thank you and all the best.
Welcome.
Thank you. The next question is from the line of Ashish Sinhal, an individual investor. Please go ahead.
Hello.
Hello, sir.
Yes, sir. Firstly, congratulations for the wonderful set of numbers. I have a couple of queries. The first is regarding this order book which you mentioned. So, like you mentioned in tons, could you please convert the same in rupees? Like how much it will be? The current order book, and what impact will it, how much will be booked in Q2 and Q3?
I think if you multiply this by with 85,000 tons, which would be almost the average price, we have some high-priced order from the different sectors, and in the range of 100 crore plus.
Okay. And sir, as far as the order books, the orders which are expected in near future, so how much will be the total value?
Total value depends upon the allocation that we get. We are expecting total orders to the tune of almost minimum 30,000 tons. So if you just almost 300 crore, yeah.
Okay, sir. That's
including GST, yeah.
Okay, sir.
Yeah.
Thank you. The next question is from the line of Ramana Reddy, an individual investor. Please go ahead.
Hi. Can you hear me?
Yeah.
First of all, congratulations for a great set of numbers.
Thank you.
Mr. Reddy, I'm so sorry to interrupt. Requesting you to please speak a bit louder.
Can you hear me now?
Yes, sir. Thank you.
Yeah. My question is, I think we are doing the molded products, and what percent of molded products we are currently doing? and respective in our revenues, and what is the growth for you are looking in this particular thing? And the second question is, especially this quarter, we have seen the margin is bit high. What exactly the drivers helped to see this peak margin?
Firstly, I'll answer your second question. The margins, they came because of the lower cost in the raw material, number one, and lower prices of fuel and packaging side, and store and repair. So all these, they contributed to the almost 5% addition to the EBITDA, to our last quarter of almost 25-26%. So on account of these 4-5 heads, we were able to increase our EBITDA by almost 5%. That was one. And as far as the molded product category is concerned, you know, in India, the implementation by the government itself has gone on the slower side. Lot many plastic products, they are coming in the segment, and looks like there is not much control on their selling in the market, which has affected adversely the molded product, and their price has gone down. So we had in-house presently 5 machines, out of which 2 machines of Zume, they are stuck up because of the problem in the Zume company itself, which were for almost 2 ton each. And the other 3 machines, out of those 3 indigenous machines, semi-automatic, we are making almost 1 ton molded cutlery presently. But definitely management hasn't stopped their focus on this segment, though that progress is not significant, I'll agree. Yeah.
Okay. Yeah, thanks for the clarification. If any questions, I'll come back.
Yeah, definitely.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Anil Kumar Sharma, an individual investor. Please go ahead.
My question has already been answered. Thank you so much.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. I'd like to remind all participants, if you have a question, please press star, then 1. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference back to the management for their closing comments.
Thank you. Thank you everyone for the interest in the company, and we hope to come up to your expectation in the coming period. Thank you.
Thank you very much. On behalf of Satia Industries Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.